Which way are we really going in the US equity markets? Any opinion I may express is only that of my own. And of course, Flip doesn't take responsibility for even though I'm an officer of Flip's, personal opinions. Let's talk about the markets, because what I think we all are trying to kind of gather out of the markets these days is, which way are we really going in the US equity markets? In which way are we really going in interest rates? Are we going to have still higher rates, or are we going to have a cut later in the year and experience lower rates? Those are kind of the underlying questions the market, of course, always tries to answer. So let's get into it. I think if everybody can see a chart in front of them, the word I have about this chart is called patience. I'm going to scale it out so you can see what's going on recently. This is essentially the year-to-date of the S&P. By clicking year-to-date, you can see that the S&P started right around here this year at around, let's make sure we're on the S&P and not the SPY Plus. It started out here in the beginning of the year, and now we are at about 384, and we're now at 404. That is approximately a move of about 20 points from 380, which only means that we're up about 5.5% on the year. That's it. So for a market that, if you're watching it or listening to the morning pundits, we always hear the market is trying to go up. It wants to go up. Well, if it does, it sure seems to be struggling doing so. And by the way, over the last 2 days, we've glided down. We are now down on April. April is a go-nothing month. We started at this point in April. We are now down on the month. We were also down in the month in February. We had this, of course, big 7% rally in January, but all of that has faded. So we ended January right here at the high, and we are now off the high from the January. The market is going nowhere. The reason it's going nowhere is there is just too many headwinds. Right now, the market did try to rally, but it hasn't gone anywhere for the last month, because they think the market has this anticipation that interest rates will be cut. We've heard it a million times. Yet inflation persists. Inflation right now is running at about 5%, and that's before next month's energy numbers come out. And when they do, it's going to show an increase in inflation. So the market has this anticipation that rates will be cut, but there is no evidence whatsoever that the Fed is going to cut rates. We also know that they may probably hike rates at the next Fed meeting, but then, of course, cut them afterwards. And the market has this anticipation again, and many advisors do, that they will cut throughout the rest of the year. I feel that that is wrong. I feel there are no cuts coming. Maybe we will see some next year, which means the market doesn't belong here. It is dislocated. I expect lower prices again, June, July. This is something we forecast early on, and we stick to the forecast. If you noticed over the last 2 days, it wiped out the last 20 days of rally. Just 2 days. And there was no real sell-off. We didn't see a 500-point move down in the Dow. We haven't seen any kind of significant moves down in the S&P. It just, for a market that wants to go up, it seems to glide down pretty easily.